Good morning, this is the latest market news. I'm Uliana. Asian stocks edged lower on Monday, losing early gains prompted by an upbeat reading in China's service sector, with tail end falling due to continued political tensions. Much of the region started the day higher on signs of growth in China's service sector, as official non-manufacturing purchasing managers index rose to 56.3 in October, according to data released over the weekend. The measure was much higher than the 50 mark that separates expansion from contraction and was the highest reading in 14 months. The effect of the data was short-lived as the region dropped lower ahead of a number of major events that could affect markets. Hong Kong's Hang Seng Index was down 0.1% and the Shanghai Composite fell less than 0.1%. Australia's ASX 200 dropped 0.2%. The impact of the Chinese data was more noticeable in Australia's currency on Monday, which knocked higher early in the session and received a further boost after local retail sales rose much more than expected in September. The so-called Aussie was at 0.9477 to the US dollar, compared to 0.9439 late Friday in New York. The next event for the currency will be the Reserve Bank of Australia meeting on Tuesday. A dovish speech given last week by Glenn Stevens, the central bank's government raised expectations that interest rates could be cut again. In Japan, where stock markets stopped trading Monday for a public holiday, the yen was little moved at 98.75 to the dollar. Several reports today will receive close attention, including the final October updates on manufacturing purchasing manager indexes for Eurozone. Later we'll see a new survey on sentiment for Europe via the Sentix Investor Confidence. In addition, today's release from Gallup will offer additional guidance for analyzing US consumer spending. Eurozone Sentix Investor Confidence Index 9:30 GMT. There has been improvement in expectations in recent months, with this and other benchmarks trending substantially higher since the spring. But suddenly there is more uncertainty on whether the upswing in confidence is truly reflective of what's actually unfolding in the economy. It was the latest market news provided by ICO FX. Goodbye.